Stop scrolling. In the last 12 months, one stock returned over 200%, another nearly tripled. Their products sit inside every AI server on the planet, and almost nobody on financial media is explaining why. You've been told the AI trade is about NVIDIA, or hyperscalers, or power. Forget that for a second. The real story is this: AI doesn't just need chips, it needs to remember. And the companies that build AI's memory just woke up from the worst downturn in their history. Wall Street still has not priced what comes next. Memory has the most violent cycle in tech. Boom, bust, boom, bust, every 3 to 4 years, like clockwork. And it's not random, it's structural. 3 companies make DRAM at scale: Samsung, SK Hynix, Micron. They control 95% of the market. NAND is slightly less concentrated, with SanDisk now in the mix after its 2024 spinoff from Western Digital. Building a new memory fab takes 3 years and $15 billion. When demand spikes, supply cannot follow. When demand drops, fabs run at a loss for years. The last cycle completely collapsed in 2022 and 2023. DRAM prices fell over 60%. The big 3 slashed capex by a third. Then demand of a kind nobody planned for showed up. AI. Here is what most people miss. When NVIDIA ships a flagship GPU, the most expensive thing on that board is not the compute die. It is the memory next to it. HBM, high bandwidth memory. A stack of DRAM bonded directly onto the GPU. The killer is this: HBM consumes 3 times the wafer area of normal DRAM. Every gigabyte of HBM is 3 gigabytes of standard DRAM the industry didn't make. SK Hynix saw it coming. They locked NVIDIA in early and now own over 50% of the HBM market. Micron is ramping fast. Samsung is the laggard, fighting yield issues. And it's not just HBM. Training AI means constant checkpoints, vector databases, key value caches. All of it needs fast NAND. NAND prices are now rising at the steepest rate in a decade. So who do you actually buy? 5 names: Micron, ticker MU, the only US-listed DRAM pure play; HBM ramp running ahead of guidance; SanDisk, ticker SNDK, the cleanest pure NAND play on the US market, structurally underfollowed since the spin; SK Hynix, listed in Korea, ticker 000660, the HBM king, the cleanest expression of this thesis on the planet; Samsung Electronics, Korean listing 005930, the laggard. But the day they fix their yields, the re-rating will be violent. And on the storage side, Seagate, ticker STX. AI cold storage. Every checkpoint, every dataset has to live somewhere, and HDDs are still the cheapest dollars per terabyte. 2 signals to watch: DRAM contract prices, published monthly. When prices roll over, you are already too late. Hyperscaler capex, Microsoft, Google, Meta, Amazon. When their capex guides moderate, memory demand decelerates with a lag. If you are early in this cycle, memory routinely returns 3 to 5x off bottoms. If you are late, drawdowns of 40 to 60% are normal. Don't fall in love with cyclical stocks. Have an exit plan before you have a position. The AI bottleneck is real. Memory is the cleanest expression of it right now. But the cycle is still the cycle. Drop a comment with which name you want me to deep dive next. Subscribe so you don't miss the next thesis. This is Market and Me.